Stocks have been under pressure so far in 2025. Time to panic and sell everything? Well, if you've had a non-diversified and tech-heavy portfolio, then you've probably been feeling some pain of late. The QQQ is down 3% so far this year in 2025. Popular growth ETF SCHD is down nearly 5% on the year, and that's only through 2 months. The Select Sector Spider Technology ETF XLK is down 6% so far here in 2025. The SMH, which is focused more on semiconductors, is down 8%, as that is led by the likes of Nvidia and Broadcom, who haven't had that great of a year so far. Anywhere you look that's growth focused hasn't really been working. But does that necessarily mean it's time to panic? No, not at all. The stock market consistently, year in and year out, decade in and decade out, goes through regular cycles. It's not just a one-way train to the moon. And in fact, seasonality-wise, February was exactly what it's always been, the second worst performing month in the S&P 500. But what you want to know what has been working? It's SCHD. And in today's video, we're going to talk a little bit more about SCHD, some key changes that'll be coming to the portfolio of SCHD as well. But before we dive into that, do me a huge favor, click that like button down below, subscribe to the channel, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is Snowball Analytics. Snowball Analytics is a tremendous platform, whether we're just talking about great dashboards to visualize your portfolio, or especially if you're a dividend investor. Snowball Analytics can house your entire portfolio, can help you perform research, but one of the dashboards that I like best is the dividend calendar. As I have a goal to attain $100,000 in annual dividend income, this dashboard not only shows my annual but monthly dividend income and automatically updates when a company increases their dividend. Between March 3rd and March 12th, Snowball Analytics is running a 30% spring sale, bringing the total for a subscription less than $9 per month. Make sure you check out the link down in the description below. All right, let's jump back into our video talking about the stock market sell-off that we've been seeing. And again, it's definitely not time to panic. We're only down roughly 5% to start the year through 2 months. We're only halfway towards a correction, and typically we get one correction on average per year, and we haven't had one in quite some time. But it's important to always take a step back. Do not let emotions creep in, because anytime we have emotional investing, that is always a losing strategy. And when we look at the past few years, which have been phenomenal years for the S&P 500, but it's been very top heavy. The Mag 7 has largely carried almost the entirety of the weight in both 23 and in 24. In fact, if you pull out the Mag 7 and look at the S&P 500 performance, it wasn't all that great of a year. Or 2 years, I should say. So what are we starting to see from big money hedge funds and money managers is the fact that they are taking profits in these Mag 7 stocks. Valuations are high and they've been sitting on huge profits over the past few years. In fact, the exposure to Mag 7 stocks have recently hit a 2-year low. And all of this can help explain the sell-off we've been seeing. As you may already know, the S&P 500 is a market cap weighted index. And when you look at the Mag 7, those 7 stocks account for more than 30% of the entire S&P 500. So when those stocks are under pressure, the index as a whole really feels it. Well, how do we know that this isn't panic selling across the board? One of the areas that I like to look at is through an ETF, the equal weight S&P 500 ETF known as RSP. And as you can see here, it is actually up roughly 3% on the year. Better than that is the Schwab US Dividend Equity ETF, otherwise known as SCHD, which is by far the best dividend ETF on the market in my eyes. SCHD is easily outpacing the S&P 500 with a total return year to date of 4.5%. Now again, this is just a small sample size of roughly 2 months to start the year, but it goes to show you the importance of not only solid diversification within your portfolio, but also having a firm foundation. This is something I talk about right from the get-go within my 6-week Investing Accelerator program. But when we talk about SCHD, it checks all the boxes. You get share price appreciation, you get a solid dividend yield, and strong dividend growth. Over the past decade, shares of SCHD have returned nearly 200%. That's an average of nearly 20% per year for a dividend ETF, which is fantastic. In terms of the dividend yield, SCHD offers a yield of 3.5%. So you mean to tell me I've been getting around a 20% return and a 3.5% yield as it stands right now? That's pretty sweet. And that's not all. The ETF invests in companies that regularly increase their dividend in a big way, which equates to a 5-year dividend growth rate of nearly 12%. Share price appreciation, strong dividend growth, and a high yield at 3.5%. It is amazing that you can check all 3 of those boxes. And here's a better look at the layout as it stands right now. Again, as I've mentioned before, I believe SCHD is the best complement to the S&P 500 or tech-heavy portfolios, as the top sectors include financials, healthcare, consumer staples, energy, and then technology. In terms of holdings, SCHD focuses on high-quality companies with strong fundamentals that pay dividends, growing dividends for the most part, but they do not invest in any REITs. The top holdings include AbbVie, which is a favorite of mine, Coca-Cola, Amgen, Cisco Systems, Pfizer, Verizon, Texas Instruments, Bristol-Myers, Chevron, and PepsiCo. In total, SCHD has 102 positions, and the top 10 makes up roughly 42%. So in showing you all of that, you may have heard me emphasize current sector breakdown and current holdings. And the reason that I emphasize that was the fact that SCHD on an annual basis goes through what we call their reconstitution, meaning there's going to be a whole set of new stocks that are going to be added to the portfolio that'll be replacing some stocks that'll get booted from the portfolio. All of this happens on the 3rd Friday in March. My good buddy SCHD Stan on X, who's a great follow by the way, did a deep dive trying to replicate the SCHD methodology to find some potential new additions and those positions that would be getting replaced here in the 2025 reconstitution. Here's what he came up with, beginning with the additions. I like Merck coming back into the portfolio in addition to Exxon and J&J. I also like Target at the current valuations as well. Here's a look at the potential losses. And my first thought is HD or Home Depot is a stock that I would like to keep in the portfolio as they offer strong dividend growth. But nothing else that gives me that feeling I had last year when Broadcom was removed. Remember, when it comes to SCHD, it's an algorithm. It's a set methodology that they go through year in and year out. There's no active management that's going to have a play on what positions come into the portfolio or what positions exit the portfolio. And I'd have to say, when we look at the data like we just did, the results have been pretty stunning. So with that being said, there's some big changes coming to SCHD in the near future, but that's not going to sway me from buying more shares right now because of the stability that it brings to my portfolio. And we are seeing that play out right here in the beginning of 2025, not only through dividend income, but also through share price appreciation when an otherwise S&P 500, it hasn't been performing all that well. So again, it gets back to the importance of diversification and having a firm foundation. So make sure you stay tuned for another video coming out on SCHD once that reconstitution, and we'll be diving into all the changes that ETF has. But before we go away, do me a huge favor and make sure that you click that like button down below to show your appreciation for these free videos that we put out on a weekly basis. And also in the comment section down below, let me know, are you already an investor of SCHD? And when was the last time you purchased more of this fantastic dividend ETF? So with that being said, I hope you enjoyed the video and we'll see you in the next one. Take care.